So this is only the second time in the last probably 10 years that I've been negative on Apple. The last time in 2012, I think, number one, growth is really slowing. I recognize how much cash they have on the sidelines. However, a company that's going to raise their dividend or is keeping cash, if they're that really a growth company, a growth story, they got to find better use for the cash than just raising dividend or buying stock back. To me, that's not a growth story. It's a mature company. It's a value story. And frankly, it looks like GE did. Beloved stock, GE, in the 90s, in 2000. GE peaked with the market in 2000 and has not looked back. Apple's been a leader for years and years and years. It looks just like GE to me. It's still beloved. 40-plus analysts follow the company. I couldn't find a single negative report from 42 analysts. All I saw were trillion-dollar valuations. It seems like it's overowned. It's an overly crowded trade, and I think it's going to underperform for the foreseeable future.
That's an interesting idea, because the bond manager, Jeff Gundlach, actually made that comment a couple of years ago about Apple. He said, everybody owns Apple, so who's left to buy it? That's why he was negative. He was right. Of course, then the stock came back and actually broke through the new highs then. Paul, what would it take for you to change your mind on Apple and become a buyer again?
Well, first of all, show me some new revolutionary product. And I don't want to, the fact that there's a rumor about them buying GoPro, that's not the Apple we used to know and love. That's a company grasping to hold on, not a company that's going to outperform. You know, Apple's underperformed the NASDAQ 100 for pretty much the entire year. So I'd want to see certainly some kind of outperformance over more than a month by Apple against the NASDAQ 100. I certainly want to see it get off the ground and move from here. So would I sell it today? I wouldn't, but I'm going to sell it at higher levels into the upper 1-teens, maybe the lower 120s, because I think at best case, it's a market performer for the next couple of years.
Andy, the bottom line is that Apple right now is an iPhone company. In order to move the needle and have any sort of traction, it's got to change that sort of scenario. The only way to do that, I would presume, is to do some sort of acquisition. But Apple's sort of damned if you do, damned if you don't. You know, as Paul had mentioned, it's got a lot of cash. If it spends it on a company and makes a big acquisition, it's going to be perceived as a mature company, because that's what mature companies do. They don't grow organically. They acquire growth. What would you like to see Apple do?
Yeah, I think, well, first of all, the whole premise that it might be perceived as a mature company being a bad thing, it is a mature company, and everybody recognizes that, so I don't think that's an undiscovered secret. It trades at 6 times EBITDA, not because it's growing, it's because it's not growing. And so I think I start with that premise that everybody already knows that it's mature. If you start there, then the #1 goal is make sure that people want to keep buying iPhones, and if you do that, come the next cycle, we probably will be growing again, and you can get some stock appreciation from that. In terms of new products, you know, the biggest problem that they have is the iPhone is so big, it's hard to make a difference, even with wildly successful stuff. So, yeah, if I'm them, I'm being prudent. I'm looking for opportunities, but I'm certainly not going out and buying GoPro or doing anything like that.
Andy, what would it make? You used to be the only. By the way, to Paul's point, Paul, you should know that Andy, for a long time, was negative to neutral on Apple, and he took a lot of heat for it. So you were, Andy, you were out there on your own. So I guess what would you have to see to go back to being a little more cautious on Apple, Andy?
Yeah, you should have read most of our reports from the last year. There's a lot of negativity there.
To be fair, he can't read them all. He's a busy guy.
No. Only the best. I mean, look at what we're looking at is as you know, we were really negative, and so the fact that everybody else has sort of come around to our opinion is why we turned around and got positive. What we're looking at now is an iPhone 7 cycle that, just because of sort of the rate of replacements, should be quite a bit better. And so what would concern us, what would get us negative, is if we thought that gross margins in that cycle weren't going to be up to par, or if people were leaving the platform and moving to somewhere else, because then we really would have to second guess our replacement assumptions.
And this all sounds like you've got, as Andy said, you have a mature company, and that's why I use the GE analogy. GE was really, really mature, and it's not. So in 2012, I said Apple was going to go down 25 to 50%. I'm not saying it's going to collapse, which it may. I'm just saying that its best days are behind it. It's going to underperform, and there's a lot of other opportunities in the super large cap tech space that possibly could give you better, certainly, returns and maybe risk-adjusted returns than Apple. And again,
like quickly, we got to go.
Well,
Paul, okay, we're going to end it there, but like what? Give us quickly one name of a stock you like right now.
Listen, I will take even Google or Amazon over Apple, and not that there's any earth-shattering news there, but I think that their better days on a relative basis are beyond Apple.